let's talk about some of the real timely, top of mind topics people are thinking of. It's inflation, it's interest rates, it's the market sell-off and a rebound today. There's China, the tech question mark, let's call it. And let's just start with inflation. Pre-call going live here, we're just talking about it a little bit. And this the real debate, I guess, centers on transitory or structural. Is the inflation temporary, transitory, whatever word you like there, or is it really structural and we're back on track with inflation? Are we above the on track sort of target inflation? I got my views, but what do you hear from people? What are people really thinking about inflation in recent weeks?
You know, to me, the inflation conversation is absolutely crucial to everything that's going on in markets and even to what the outlooks look like. The challenge is that there's a little bit of a pick your tune right now. You have the same number of people talking about inflation as you have now emerging stagflation, and you have, the proponents of deflation. So it's been kind of tricky to figure out what exactly is the situation. I think when you have inflation hitting multi-year highs, we're going to be talking about Europe later. In Europe is at 13-year highs inflation. So you immediately go into, okay, are we entering crisis mode? Is this going to be serious? Then you get into the, is this transitory? Is it a structural? It seems like the prevailing narrative is that it is transitory. The question I have is, at what point, what is the telltale sign here when we've moved from transitory to structural? What exactly are we looking for to change that conversation? Or is this just what it is and it's going to be fine? So it's been a challenging space to navigate because there's such diverse opinions about it. I mean, what are you thinking? How are you framing this conversation?
Yeah, I think the media likes to create a story even when there is none. And they're bad at data. They really are. And if you look at the data, what's the year-over-year calculation? Well, we're comparing to a year in which there was a COVID-driven sell-off in everything. Oil was negative. And oil's rebounded to, multi-year highs. That's probably temporary. The world hasn't forgotten how to produce oil. It's just that the drilling has been slowly ramping up. U.S. production keeps on growing, and that's going to go back to a relatively normal state that will reflect production costs, which in the US are about $50. So I think the media loves to create a story, and then they create this debate, and is it transitory? Is it stagflation? Is it this? Is it that? It's fear-mongering in a sense, like try to generate volatility and stuff to talk about. If you look at production capacity in the world, there is a temporary constraint. From microchips, the world hasn't forgotten how to produce them. It's just that there were plants that were shut down because of COVID, and demand for used cars, demand for other things that use new cars and electronics and goods that people wanted to buy. So there's more demand that exceeded supply, but it was temporary. The production capacity has not disappeared. It's just suffered a bit of a setback because of COVID. So I guess inflation, for it to be structural, you basically require COVID to be structural, permanent, like a permanent impairment to the production capacity of the world. I think that's a pretty extreme point of view, to think that COVID is going to permanently keep, the labor participation rate at the depressed levels globally.